Many were bracing for China's economy to make a hard landing on the other side of a so-called Great Wall of Worry. Transforming it from an industrial powerhouse to a consumer and services-driven economy was seen as a move that could hurt growth. But as China enters the second year of this shift, the economy is showing that it's doing just fine. It grew at 6.9% last year, above forecasts and bouncing back from a 26-year low in 2016. For the fourth quarter of 2017, the economy grew at 6.8%, also beating estimates.
The national economy has maintained the momentum of stable and sound development and exceeded the expectation with firm steps taken to secure a decisive victory in building a moderately prosperous society in all respects.
Robust growth in industrial output and exports, a resilient property market, and a pickup in global growth were the main drivers of the expansion last year. A surge in demand for tech products and semiconductors boosted Chinese exports to grow at its fastest pace in 4 years. And Beijing is starting to see results from a crackdown on deleveraging. The country's debt-to-GDP ratio fell for the first time in 6 years. The government has also been keeping its pledge to keep the currency stable. The yuan strengthened 6.8% against the dollar last year, posting its best annual performance since 2008. Despite the economy's outperformance, the government is keeping its estimates modest this year, forecasting annual growth of around 6.5%. It wants to ramp up efforts to cut overcapacity, curb debt levels, and contain financial risks, while keeping growth sustainable. Analysts expect China's economy to feel a bigger pinch this year from Beijing's war on pollution. Other headwinds it faces are tighter regulations in the financial services industry, US trade protectionism and restrictions on Chinese exports, and consumer spending and business investments losing momentum.
The recent Chinese government policies, it is emphasizing reducing financial risks. It is emphasizing reforming the state-owned companies. Yes, it's not as radical as we would like, but it's moving in the right direction.
It might take a while for the Chinese economy to reach that ideal, but for now, it's taking the growing pains in its stride. Laila Humairah, TRT World.
For more, let's bring in Qing Wang from Coventry in the UK. She's a professor of marketing and innovation at Warwick Business School. Qing, great to have you on Money Talks once again. How reliable are China's official statistics? Many people pointing to the fact that the growth numbers are remarkably stable over recent years, whereas in many other countries, there's a lot more volatility in these numbers.
Well, it's always hard to say how reliable it is. But if you look at other evidence, and that's what I have based my observation on, which is my own research and going to China and talking to the enterprises. And I think it's actually quite reliable for whatever we hear. The 6.9% is what my feeling is when I'm talking to the enterprises.
In October, President Xi said he doesn't want growth at any old cost. Is China's expansion still too fast for its fiscal situation and in terms of its environmental situation?
Yeah, I think this is a challenge that the government is facing. Is now it has to balance many different aspects of the country rather than just pushing the GDP as it has been done in the past, such as the environment and such as the poverty gap. We talk about the debt problem. Part of the GDP growth is filled by the debt that the local government has been having from the banks to develop the economy. We have to remember that the rate of growth is probably not a problem for the country, but the uneven growth is a problem. And what I have seen is this gap between the advanced regions developing their economies And the backwards regions is very much enlarged in the past year or so, that you can see some really great hot spots, but at the same time, some very lagging behind. And I think that is the challenge that the government is facing.
I'm glad you brought up that issue of uneven growth. So that is looking at it geographically, but when you look at it in terms of sectors of the economy, where do you see those hotspots? Is it in property? Is it in steel production, aluminium, for example? Where are the examples of overcapacity?
Yeah, I mean, this is great question. It's actually the unevenness is in two aspects. One is regional unevenness. One is sectoral unevenness. You ask me about the sectoral unevenness. Certainly, the old, traditional industrial sectors like the very heavy, energy-heavy type of steel production, for example, is very much in decline. And this actually is related also to the uneven regional growth, because some regions are or used to be, very heavy in those kind of sectors, such as the northeast of China, now is having a huge problem. In terms of the regional development, I mean, we have to remember that the government is very good at trying to provide extra incentives and policy incentives to try to bring some of the backward regions up. For example, the Belt and Road recent strategy is actually helping some backward regions, such as the West, the West region, like Shanxi and Sichuan province, where the Silk Road was going through. However, that does not benefit all the other backward regions.
Qing, now,
sorry, just...
Yes, go ahead.
Sorry, just in terms of the fast-growing sectors, it's definitely digital. Anything to do with e-commerce is absolutely prospering. There's a huge appetite in the consumer side to actually using e-commerce and also e-payment.
Right. I want to focus a little bit on debt for a second more. The government has been doing a pretty good job in reining in its overall debt to GDP ratio. But as we've said, there are still some hotspots, in particular in things like consumer debt and household debt. What are the consequences of it not being able to control this and that bubble bursting? Would it be able to contain that? And would there be a global contagion effect if that happens?
Well, I don't think the same, so the subprime market that we're talking about that happened in 2008 would actually happen in China, purely because the nature of the country, nature of the market is very different. So I wouldn't think the consumer household debt would be a huge problem. What problem to me is the local government debt. As I said earlier, lots of the development has been because of the local government's debts to try to develop infrastructure in the roads to try to boost the local economy. And also the state-owned enterprises are also very heavily debted. And that's the government is a danger, is the risk for the government.
Professor Qing Wang of Warwick Business School in the UK, thank you ever so much.